In conversation with the MD and CEO of Cipla, Cipla just came out with this number. Umang, thanks so much for speaking to Bloomberg Quint. I think the important part that firstly stood out from the numbers was this India business. There's a degrowth of 12%. Obviously, there is a bit of reorganization that's happened. Explain to us what this reorganization is, and is it only going to happen this quarter, or probably the repercussions will be seen over the next few quarters?
So India, let's talk through what happened. We have two businesses, Darshan. One is the RX, our branded prescription business, and the other is our generic business. On the branded prescription business, we saw a relatively higher order flow towards the end of the month, and our accounting procedures cut off orders that, after a particular date for the recognition in this particular quarter. So that's played out. That's roughly about 85 to 90 crores worth of impact. So that spills to quarter two. It doesn't get billed in quarter one, and it's not lost sales. It's basically coming. The other impact that happened was our reorganization in the generic business. We had alluded to this in the previous quarter, in quarter four, where we mentioned that we are seeing stress in the distribution channel on the generic side. Now, whether it's on account of issues related to stock levels in the market, or it's a function of credit, or whatever it is, right? There was stress in that system. We've chosen to churn some distribution centers, distribution outlets there, and I think that impact over a quarter has hit us this quarter. And that's a pretty significant impact to our business. Typically our generic business is, I'd say about 25-30% of our overall business in the formulation, in the India formulation space. So on that 30%, we've had a pretty significant impact. We don't believe that part of the sales will recover at the end of the year. But I do believe that in quarter two, we will reach to levels where we were the previous year. So which means that's the first turnaround. And then I think we should be okay from there on. But right now we see a lot of instability in the distribution trade, to be very honest, because there are consolidators who arrive now, who are buying for all groups, who are buying for hospitals, groups. There are aggregators who arrived, and then there are the government schemes that are working, right? So I think the channel, as we see it, is very different than the channel was 2 years or 3 years back. And the first impact comes in the generic business. So we're tooling that business accordingly.
Okay. The good part was the US business, while the street was anticipated that, because of a drop in Sensipar sales, probably you would do close to 120, 130. You've done 160. So pretty much you've matched what you did last quarter. How much did Sensipar contribute, and what's the impact on the base business? How much did that grow?
So I can tell you the base business has grown, right? We're not splitting those numbers either way. The base business has grown. We've not had any major launch in the last quarter, right? And we are looking forward to seeing the launch momentum continue and end Q2, early Q3, and thereafter. There's been a little bit of a quarter mismatch between the limited competition arrivals. But the base business has grown, and Sensipar also gave us a fairly significant share about it. So we're okay with the US trajectory. And of course, the more it is, the better it is, but it's clearly linked to the launches that you make. So since we didn't have a really big launch, in this quarter, I think it's fine. It's grown, but it's not grown to what we wanted it to be.
If you can't give me a number on Sensipar, how much the sales was it constant what we saw over last quarter, or was there a dip in sales?
I think it's a slight decline. It's not the same.
Okay. The other part is some of the drugs that you have Pulmicort, Voltaren Gel, all of them are seeing now competition come in. What's your trajectory? Will competition mean that there will be more pressure, and how are you looking to counter this?
So a lot of competition has already come in. In our quarter numbers, there's a fair reflection of the competition that's come into Pulmicort, that's coming into Voltaren Gel, right? So a lot of these have already come in. And we think there'll be more competition coming, but the only antidote to this is to have your own new limited competition launches, which we're hoping will come pretty soon. But there is probably a gap of about a quarter in that.
Okay. The other part was the tender business, probably that didn't do well. What caused that? Are you seeing stress there?
So we are seeing stress there, but this is not a new theme. We had guided, remember, in quarter two, quarter three, that look, we will see this over the next 2 to 3 quarters. The good news is that outside of South Africa, this has reached its base level now, and South Africa over the next 1 quarter or 2 quarters will correct out. But our private market business in South Africa will offset this tender, what we're seeing in the tender side. So I think we're pretty bullish about this business coming around, and probably seeing a little bit of pain in this quarter, possibly early part of Q3, and then after that we're fine.
If you look at your annual report that came out recently, the cash conversion cycle, there was a slight bit of increase in days. It was close to 206 and it moved to close to 220. What's the ideal level you are looking at, and are you concerned with the moving up of these days?
No, I think with the annual report, there's one thing that you should keep in mind. It was probably bumped up because of Cinecalcet receivables.
Sure.
Because that came into the last quarter of the year. Actually, we've seen our cash flow improve.
Okay.
So we recently paid down a part of our loan that we had borrowed for Inversion. So, we paid it down ahead of schedule. So our cash collection and our cash cycle is actually quite healthy.
Okay.
So, I think that may have been because of the receivable that was due on account of Cinecalcet, but beyond that, I think we're okay.
You spoke about Inversion. I just want to ask, how's the performance there? Are you happy? Are you seeing traction? And is it panning out the way you had envisaged when you bought it?
I think I can't say it's panning out the way because we had bought it, because I think a lot of the US market has gone through a huge churn from the time we bought it. But at the same time, the business has not fallen off.
Okay.
Right? It's we bought a business which is about $200 million of sale. That business pretty much stays there. It's 10 million here, 20, but it stayed there. So it's given us what we wanted, which is the critical mass in some way in the US. It's given us saliency with customers. And it's also helped us in other channels that we didn't have with this business, right? So the Inversion business also operates in the federal channel, right? Because of the manufacturing that's there in the US, etc. And that continues to grow. That part of our business continues to grow.
Okay. Over the last few conversations that you've had, you said that the margins are now, the 20% is the new normal from the 25-30 earlier. You've managed to stay at that level. What next? What are the levers to improve this margin now?
Quite honestly, Darshan, my view would be that we should try and look at top line.
Okay.
Because, taking up EBITDA margin from 20 to 23, I mean, it can be done, right? But I'd rather be 20 in a larger organization than be 23 in a smaller organization, right? Okay. I think there's no limit to EBITDA. You can keep going up and down, but, I don't think Cipla was created to be the first, the largest, the best EBITDA company. But we certainly were created with a different ethos about caring for life. So I think it would be more about trying to drive top line growth. There we are facing some challenges, right? And we want to make sure that we are able to get our top line growth and the engine working there.
Yeah, so if you're looking at top line growth, that probably will come in. We've seen that recently a lot of these companies, to bump up the margins, they have been pushing back R&D cost. Is that something that you'd look to bump up R&D cost, or would you keep that capped?
I don't think we can afford R&D beyond 8%, Darshan. So we are in that range, 7 to 8, and we have clinical trials ongoing right now for Advair. That's already baked into our cost. So I don't see R&D going up. We definitely love to do more of it, but I don't think our margin profile will allow it.
Okay. Post the fourth quarter for the FY20 guidance that you had given, you had said that it will be higher margins. Obviously, we spoke about the margins, but you also said double-digit US growth that will come in. Is that what you're sensing, seeing the current situation?
Yeah, I think we're guided a little bit also because we knew that Cinecalcet will be there. So I think the double-digit growth, we're hoping to get there. And probably we will get there in the US. But margins are still under pressure in the US. Pricing is still under pressure.
What's the product pipeline? How do you see the next few quarters?
So we have a couple of assets lined up, quarter 3, quarter 4. We're also hoping that if not by the end of this year, but early next year for sure, we'll have albuterol as a product that we could launch, which will be our first MDI inhaler in the US. So we're hopeful. We're guiding towards a limited competition launch resuming after maybe towards the end of quarter 2 or early quarter 3 into the next year.
So you had said 2 inhaler filing, including Advair. So is that on track?
Yes.
That is on track. Okay, and what can we expect? I think the market would probably want a little bit more clarity on what will happen with the India business over the next 3 quarters. If you can just highlight that.
So I see our
what's your sense you're seeing here now?
Yeah, I see our branded business coming back to industry growth in quarter 2, quarter 3, quarter 4, which is what they've been doing over the past couple of quarters. So I expect that to continue. I expect our generic business to come back to growth in quarter 3. I expect it to come back to where it was last year by quarter 2. So I think the outlook is still strong. We've made this conscious choice to churn the distribution, and I think it'll hold us in good stead for the long run.
Okay, Umang, thank you so much for speaking to Bloomberg Quint, and all the best for the
Thank you, Darsh.